Are you self-employed and the bank has told you, you write off too much so you can't buy a home? I want you to take a breath, because that's one of the most common myths in home buying. Here's the truth. Writing things off doesn't automatically mean you can't qualify. You should take the legitimate deductions you need to run your business and manage taxes responsibly. The problem is that a lot of lenders only know one way to qualify a self-employed borrower, and that method relies heavily on taxable income. If your taxable income looks low because you're doing what smart business owners do, tracking expenses, then that one method might not work. But that doesn't mean homeownership is off the table. What it really comes down to is documentation options. There are multiple ways to show your ability to repay a mortgage, and the best approach depends on your business type, how consistent your income is, and what your goals are. Over this 10-video series, I'm going to break down the main self-employed paths, when they tend to work, and what to watch out for. For today, I just want you to know the menu of options that may be available. First, bank statement loans. These look at your deposits over time to estimate income, instead of relying only on the taxable income line from your return. Second, 1099 only options, common for contractors and certain types of self-employed income where documentation is simpler. We have asset-based qualification, where strong verified assets can support qualifying even when traditional income documentation is limited. There are also P&L-based approaches that go off of a profit and loss statement prepared by you or your CPA. For investors, DSCR loans are great. The focus shifts to whether the property's cash flow supports the payment rather than your personal income. If you have income from outside the US, in many cases we can use foreign income and even credit. We often find we can actually qualify people based on their tax returns, even after the bank has denied them based on the very same returns. Remember, not all lenders are created equal. And last, if none of the options above work out, we have stated or no doc, options where we do not consider income at all. Don't assume you're stuck renting forever, and please don't make a tax decision just to fit a mortgage. The goal is to match you to the right path for you. Give me a call and tell me what you do, just the basics, and I'll point you toward which of these options usually fits your situation. In video 2, we'll start with bank statement loans, how they work, what counts as income, and the biggest mistakes to avoid.